Can you hear me? Give me a 5 by 5 on Twitter. I'm not looking at the chat window on YouTube. That's for the trolls. Okay, just a little bit of a delay. It doesn't seem as bad as it was yesterday, but all right. So this one probably won't be all that long today. We're just gonna go into the news at 10, probably like 10:15. We'll end the stream because I have a lot of work to do with video work. But I want to go over real quick. Time frame. We'll look at the daily. And for the folks that are still complaining about my color, I want you to go back to the white background. I can't. I'm trying to make the best I can by dimming the background and still going with the color scheme you see in front of you. All right, so we are kind of like in no man's land from this high to that low. We're worked back up into this imbalance here, and we're still inside of yesterday's daily range. We already touched the opening gap on Sunday, and had imbalance in here. So far, it's respecting that. Notice the bodies of that there. So we have sell side resting around 3,900. My interest was initially to see if they wanted to take it back up into this session opening gap. This is where they started trading again last night, 6 o'clock. So while I'm not suggesting that it's going to completely fill that in, I was looking to see if they wanted to take it back up and just bump this high. I'm not in a hurry to do anything today because it's literally, it's not even 50-50 right now. Like I don't have a clear decision on what side of the marketplace I want to play, but this is the only interest I have right now. If we take out the Sunday gap opening, as I mentioned yesterday, if we go below that and come back up into it, that to me would be a scenario that could provide possible bearishness. But again, we're speaking hypothetically here over paper trading and charting. You gotta remember this is all opinion. Look at the 15-minute time frame. They left relative equal highs in place here too as well. Extend the Sunday gap. So I was talking a little bit yesterday about how the market needs to be like one-sided, and that's how I classify a low resistance liquidity run. So if it doesn't give you or me or anyone else is studying and back testing and forward testing or demo trading, if you're not able to see one side clearly, you're gambling, okay, and you're wasting your time even with a demo account. So I'm looking at the relationship between the NASDAQ and the S&P this morning at their highs. It looks like they may want to dig into the lows overnight in London on both E-mini and NASDAQ. So initially, we're looking down here. sloppy, sloppy morning. All right, I have a little gap in here. Now there's news coming out in a few minutes, and then at 10 o'clock as well. So we're allowing for that to take place and whatever manipulation or other as a result of that. So let's outline this. Okay, so there's your two pools of liquidity this morning. This one here, just based on the relationship between the highs. Look at the 5-minute chart between the E-mini S&P June contract and that of the E-mini NASDAQ 5-minute chart. You'll see that there's an SMT divergence. That means NASDAQ was failing to make a higher high like we saw in the S&P here. It's not a trade. Don't get crazy and going and entering. Protein shake, in case you're wondering. I'm more interested to see what we're doing when they bring the news out at 9:45 and 10 o'clock. Typically, you get like a more pure price run between 10 and 10:30. So that kind of like overlaps with after the news is released to the marketplace. So they'll use whatever sentiment. I mentioned yesterday that they would use the sentiment with the initial bullishness at the open, and they took the market rather lower into the Sunday gap opening, and then pushed it higher into the day. So we're kind of looking similar fashion today, waiting for the news to come out to manipulate the liquidity pools that are noted here. Admittedly, I do not know which one with high probability is going to be hit first. So that way we understand going forward. I'm waiting to see what they do with the news. And you're all welcome to go on to Twitter and tell me what you think is going to happen first. Just be sure to tell me where your entry, your stop, and your target is too. Everybody wants to come back behind me and say, oh, well, he didn't do this, but he didn't do that. But you don't trade live, though. Can't say that no more, can they? So just a minute or two, we'll have a little bit of volatility probably come in. NASDAQ is decidedly weak. It's already taken out its London lows. So we'll look to see if the S&P wants to follow suit and go lower. Now, with the fact that we traded into about halfway into the gap on Sunday's gap opening for S&P, to trade into that gap again would, in my mind, expect it to see it go down to the lower end of the gap. And that's just going on what I see in NASDAQ. Now, some of you are looking at the Dow and wondering why I don't touch that. As I mentioned yesterday, I'm not interested in trading it because it's a little bit more erratic. If you look at it compared to NASDAQ is still real heavy down near its 3 a.m. lows. S&P into its fair value gap, and Dow is just flirting with its opening range high. So we're all over the place waiting for the news. What you're studying is, does it hit this, roll down, attack the overnight lows, and come to the low of the gap on Sunday's gap opening? That's what you're observing. That's what you're studying. NASDAQ remains exceedingly weak. Now, if you have access to the dollar, you can pull that up on TradingView. Dollar's weak while NASDAQ is weak, and that is a mixed market. We have lift on euro. It's going a little bit higher today. That's the strongest one between it and cable. So NASDAQ 11,690. Next level of interest for me. S&P still holding in. Has yet to take its overnight lows. Look at your Dow chart. YM. Ugly. That's why I don't touch it. That's why I don't trade it. At intermediate term highs and lows and looking at market structure, I'll use the Dow as a confirmation of present market structure, but I'm not using Dow for like a trading instrument. I'll look at it in relationship to NASDAQ and the S&P, but prefer to trade either ES or NQ. Are the charts clean? Like, can you see like the wicks and all through the stream? Because I don't have a way of seeing that. I don't want to have too many. I'm checking on Twitter for your response, by the way. Thank you, Reggie. Thank you, Mark. So when you're looking at price and it's doing things like this, you want to see it kind of respect this swing high, not return back to the fair value gap. So if you were, let's say you were taking this as a paper trade, okay, and you use this fair value gap as your entry, you have this fair value gap here on the 1 minute chart. Because we already got rotation and took out a swing low, it's less likely to go back to this one. If it does, it's probably going to go for the buy side. That's how I would interpret it. So your stop could be used just for sake of, the risk model for it. This candle's low. That would be basically the high end of the gap. That's where, using this entry, that's where your stop would be for paper trading it. It's not a trade recommendation. I'm not saying get in here. Dollar index making a lower low for today. Now look at the way the market structure is right now. Compare the S&P to the Dow. Did it look similar? Nothing similar. How about the NASDAQ? Is that similar to S&P? No. So this is what I'm referring to as a mixed market. It doesn't mean that you can't trade it. It just means that it makes it very, very difficult. And it's not clear to determine where the market's going to likely draw to next. Like where is the next easy objective for it to reprice to? Because if you can't see that, it's better to stay out. Got a couple more minutes and we'll have the 10 o'clock hour start. So I guess what I'm trying to communicate from yesterday and today is there are certain, I guess, frameworks or structure in the marketplace that is more conducive for a low resistance liquidity run. Low resistance liquidity run is where the market shows a clear defined area of draw where it's likely to go to, like relative equal lows or an old high, and we've been bullish. So it's pretty much next to a no-brainer if there ever really was. But nothing's risk-free, obviously. But you're looking for areas that give you opportunity to see the market move from where you're studying it at the market price and define risk in terms of a low risk, and then at least have two or three of what you were anticipated as a risk for the trade. If you can find that and it's framed on the basis of low resistance liquidity. Now, when I say low resistance, don't think that it's a move going up because you're thinking like support and resistance, so resistance will be above price. Don't think like that. What I'm saying is resistance in impeding the flow or the fluidity of price delivering to a particular price level. In other words, if we're bearish, how hard has it been so far for the market to trade back down into the Sunday gap? It's been reluctant so far, right, for the S&P. Now look at the 5-minute chart on NQM2022 or June contract for NASDAQ. That is a easy run to overnight lows, 3 o'clock in the morning. It just went right down there like a ninth. Let me see. Okay, NASDAQ's almost at that 11,690. It's just an objective. It's not like a turning point from here, nothing like that. Dow just being ugly. Ugly Kid Joe. All right, now these are the times where you have to be careful because we went below this low here. We went below this low here. And this low, we went below it here. While the NASDAQ is going lower, S&P is being fickle. Now, there are times when I want to see like that fair value gap that I've just noted here. I like to see those stay open, not see it closed in. And the reason why is because I just outlined we went below this low here, this low below here, and this low here. So I'd like to see this stay open and then run down into the Sunday gap. I would prefer to see that. Why? Because NASDAQ has been heavy, meaning it's been going down easiest between the two indices. If you were looking for a short, do you short the one that has the higher high or the lower high? Using what I'm teaching in SMT, you're going to short the one that has the lower high. So that would have been NASDAQ. Now, obviously, there's going to be cynics here. Well, why didn't you look at that? Because I'm showing you the relationship. If you just follow one instrument, which is really what you should be trying to do, you should be focusing on becoming a specialist, looking at one market, trying to capitalize on that one market and learn its characteristics, trust it, but also refer to other markets. We should get that run below the 3 a.m. lows now in S&P. The key is, do we go there and accelerate to the downside, or does it pull back into the range that is this high and whatever low it forms? The Dow is still not trying to join the party. NASDAQ has broke 11,680. Not yet. There it is. 16. I'm sorry, 11,680's been dusted on NASDAQ. All right, we got down into the Sunday gap opening again. We've already revisited half of that yesterday. So think down here. We're already in it. So if it's going to go here, think down there. And that would be an objective for you to take like a first partial, something like that. And your stop would roll to below break even, or would be better than break even. So that way you don't have any risk. So your stop would be, we'll just use this candlestick high. Okay, NASDAQ still falling out of bed. Dow looks like it wants to roll over. It has a small little 1 minute imbalance it's trying to trade back up into. Let's see if it accelerates to the downside and reaches for 31,580. I'm a lot more interesting when the market's better. these are very boring market conditions, but these are the ones that you need to understand. Okay, this is where you hurt yourself if you don't know what you're looking for or what you're seeing. It's hard to interpret it if you don't have the experience. All right, so we have 10 o'clock hour. Whatever impact news is going to bring is going to get priced in now. All right, and that's when you would be paying the trader, taking something out. Notice that we had that gap stay open here. It's almost like it listened, didn't it? So you would roll your stop now to this level here, because if it's going to go back here to that gap, it's not good for being bearish. You don't want to see that now. We're into a larger leg of, not leg, but an area of order flow, which is that gap opening on Sunday. So since we're down here now and we completely filled it in, to come back up here, I'm not interested in taking another short. So you would be, at least half your position would be off now, if not 80% of it, and then leave the balance on with a stop to here for your paper trade, okay? Hindsight only. We're dealing with hindsight with the time machine. So it's a little bit interesting to see how folks will come into the content, or they'll come to the Twitter, or they'll go to my community tab posts and read them, or go to my comment section of the videos, and they'll say, I've watched this video and I can't make it work. It's because you're not doing this part of it. You're sitting in front of the chart, not trying to push a button. You're not trying to determine, where to get in, because all those things in the beginning are the least important. You have to know what it's doing. Where is it reaching? What's it trying to get to? Is there a reason why it needs to get to a specific level? What would that be? It's narrative. Is there an economic calendar event that's likely to come in and inspire some volatility? Is there if things can happen around the world, let's say like that, something unexpected can happen and cause an upset, something war related, or along the lines of something like that. All right, we just took out that short-term low here. Now, when I see that, I like to move the stop a little bit lower. So now we have a gap here. So I don't want to see this gap traded to either now, because we're below Sunday's gap opening. So your stop would be right in here on your balance, which would be about 20% of whatever the original position was at that fair value gap there. So you're already, quote unquote, hypothetically booked in profit with only 20% of your original position on, and stops are rolled to a nice place where even if it comes back up and knocks you out, who cares? Who cares? This is a very hard day. The markets are mixed. The indices are dropping with the dollar index. So that right there means that you have to be very careful. Number one, you got to be selective in where you're trying to get to and where's the market going to draw to. This was a beautiful example of that. So I told you I wouldn't be here long this morning, but this is certainly long enough for this to have communicated concept, experience, precision, whatever, fill in the blank. If you are live, if you're here watching me do this and outline it, did we use any rented MT4 servers? Did your chart paint like we were expecting real time? Did your chart turn here on a dime, just like mine does? Did I do any kind of sorcery, any kind of trickery? Did I pull some kind of scheme? Did I fraudulently trick you? Did I hypnotize you? Am I paying you to say yes? Am I paying you money to go out and rep me and try to get people to believe that what I talk about and teach is real? Or did you witness it? Did you just witness this? Because if you witnessed this, give me an amen. Drunk Monkey says he must have connected to the same fake MT4 server. I love it. Well, hopefully this will inspire folks that are on social media, on Instagram and on Twitter, to sit down with everyone that has a sincere interest in learning from them, to sit down and show it, just explain it, give the logic why it should work. And if it's real, then it should pan out. If it isn't, then there's your answer. There's no reason to be a jerk about it. All right. So going forward, because I'm going to close the string here, if it takes out this low, I would take another portion off and roll the stop to the top of the gap. Okay, another partial should be taken. The stop should be rolled to the top of the gap. It should not ever go back to that point if it's going to remain bearish. And then you just hold on to see what you can squeeze out of it. If you can get another 10 points out of it, there it is. I would be taking mine out now and closing it for the day and just watch and see what the afternoon session does. But that's just me. You do what you want to do. So hopefully, yeah, hopefully, obviously, you guys found this insightful and got something from it. If you did, just give me some feedback on Twitter. I appreciate it. Enjoy the rest of your day. Be safe.